Donald Trump imposed a 25% tariff.
U.S. President Trump is shaking up.
U.S. President Donald Trump.
U.S. President Donald Trump.
Did Trump just crash the economy on purpose? That's the question that I'm answering today. And I promise you, by the time you finish this video, you will never look at the markets the same way again. Because what I'm about to show you isn't just another take on the economy. I've spent 4 weeks looking into this topic, uncovering the patterns, the hidden strategies and agendas, and the shocking reality of what's happening right now. This is not what Fox or CNN is telling you. And by the end of today, you'll understand exactly why some experts believe Trump is deliberately crashing the economy and why you might actually be part of a bigger plan. Now, for the last 2 years, we've watched inflation spiral higher than anyone could have predicted. The Federal Reserve responded with one of the fastest rate hike cycles in history, forcing borrowing costs through the roof. And for a while, the stock market over and over hit all-time highs. It didn't make sense until suddenly it was like a bomb went off. Right now, the numbers tell a brand new story. Economic growth is slowing down. Businesses are making less money. Hiring is stalling and consumer confidence is collapsing. People are spending less because they're worried about what comes next. And when that happens, investors pull their money out of risky assets. I'm talking stocks and crypto and even real estate. And the market right now is starting to break. And here's where things get interesting. Because according to some experts, this isn't just another natural economic downturn. This was planned. Trump is engineering a crash on purpose. And before you roll your eyes, let me show you exactly why this theory isn't as crazy as it sounds. Now, there's a term I want you to know about called kitchen sinking. And in many news articles and podcasts, you might have heard this. It became popular again after Elon Musk tweeted a photoshopped image of him walking into the Oval Office with a kitchen sink. The original image was first him walking into the Twitter headquarters after he just bought it with a literal kitchen sink. And if you've never heard this before, here's what it means. When a new administration comes into power, sometimes they will intentionally let the economy in certain areas take a hit in their term. Not because they want to destroy the economy, but because they want to flush out the bad stuff now so they can take credit for a very strong recovery later, aka everything but the kitchen sink. This isn't just a theory, it's already happened before. You know, back in the 1980s when Ronald Reagan took office, back then inflation was absolutely out of control, just like we've seen in the last couple of years. And Reagan's team watched the market crash hard in the first years in office. The Dow Jones, in fact, had dropped about 25% in his first year in office, and GDP ended up going negative. The economy at that time went into a deep recession. People were losing jobs, businesses struggled, but after all of that pain, something happened. The system reset, and the market bottomed out, and Reagan's administration was able to rebuild the economy from the ground up. By his second term, they were able to take credit for one of the biggest economic booms in US history. So, could the same thing be happening right now? If history is repeating itself, then we are still in the early quote-unquote crash phase of the cycle. But this time, there's one massive difference. Back in the 1980s when the Fed hiked rates to kill inflation, the US government had way less debt. Today, we've got over $34 trillion in national debt. But that's not the worst part. Right now, just the interest payments on our debt is skyrocketing. The Congressional Budget Office projects that interest payments will total $952 billion in 2025, and that will rise rapidly through the next decade, climbing to over $1 trillion in 26 and $1.8 trillion in 2035. In total, net payments for interest alone will be $13.8 trillion over the next decade. This means that that money is not going towards infrastructure, Social Security, or anywhere productive. It's just vanishing into thin air to cover debt. This is a major problem because the US government operates at a massive deficit, which means they don't have that money. So they have two options. They can print more money, which fuels inflation and devalues the dollar. You've felt that for decades. Or they can find a way to bring interest rates down fast. And if you understand how the system really works, you already know exactly what they're going to do. The government is drowning in high interest debt, just like a homeowner stuck with a 7% mortgage. They desperately right now need to refinance. Except instead of a mortgage, they refinance through bonds. Every year, the government issues new bonds to pay off old debt that you can purchase. But when rates are high, they're forced to roll over debt at an insanely expensive interest rate. It's equivalent to you right now having a credit card with a 2% interest and then suddenly getting hit with a 25% interest overnight on that same credit card. That's where we are, and it's completely unsustainable, which is why the government needs lower rates. Not just to help you and the economy, not just to stop a recession, but to save themselves from a debt crisis. And that's why we need to talk about what happens next. This is not a normal reset. Because if this market crash is being orchestrated on purpose, and they can't rebuild the way that they have in the past, then we are looking at a much longer, much more painful downturn than most people realize. This is not just a controlled reset like the 1980s. This is a high-risk situation with massive consequences for anyone who's not paying attention right now. And here's the real kicker. Even when the Fed does eventually pivot and lower rates again, it's not going to be like last time. Which is why we need to talk about what's coming next. And more importantly, how you can position yourself before the next phase of the cycle kicks in. Because trust me, that cycle is going to kick in, whether you're ready for it or not. So where is all this headed? What happens next? Is this going to be another just temporary dip like we've seen? Or is this something much, much bigger that you need to be worried about? Because if you make the right moves right now, you could end up on the winning side of this. But if you don't, you could get completely wiped out. Let's talk about what's coming next. All right, so now that we understand why this could be happening, let's talk about what actually comes next. Because if the government is allowing the market to crash on purpose, then they always have a plan for what happens after. And that's what most people don't see coming. And if you don't see it coming either, you won't be ready. So here's what's likely to happen next, step by step. First, let's talk about the big picture cycle that the government and central banks follow. This is something most investors completely ignore, and it's why so many people get wrecked when the market takes a turn. If you look at history, the economy moves in predictable cycles. It doesn't just go up forever, it also doesn't ever crash forever. And when things are falling apart, the governments do the same thing over and over again. They tighten, they break things, they then step in and try to fix them. And right now we are in what I would call the breaking things phase. So what does that mean exactly? It means the government is taking liquidity out of the system. Now, if you don't know what that means, let me explain it as simply as I can. Liquidity is just a fancy word for how much money is moving around in the economy. When there's a lot of liquidity, markets go up. People are spending, they're borrowing, they're investing, traveling, stocks rise, crypto rises, real estate booms. But when liquidity shrinks, when money stops flowing, the opposite happens. Markets drop. People panic, investors pull out, businesses start to struggle, and eventually people start losing their jobs. That's exactly what we're seeing right now. And the government, they're letting it happen. They're not rushing in to save things yet. In fact, the Fed is making things worse by keeping interest rates high. Why? Because they need an excuse to step in later. And that's where things start to get really interesting. If history tells us anything, the next step is simple. Once things get bad enough, once the market crashes hard enough, once unemployment rises enough, once businesses suffer enough, then suddenly the government will step in like a hero with a cape to quote unquote save the day, and the Fed will lower interest rates. They'll inject trillions of dollars back into the economy. The government will introduce new stimulus programs, and guess what happens next? Asset prices explode. And this is where most people miss the biggest opportunities of their lifetime. Because while everyone else is panicking during the crash, the smart money is positioning themselves for what comes after. So the real question is, how do you position yourself so that you're on the right side of this? Because if the market is still dropping, you don't want to be too early. And if you put your money in too soon, you'll get crushed and feel bad about it. But if you wait too long, you'll miss the biggest part of the recovery. So what's the strategy here? Right now, you need to be thinking in phases. Phase 1, preserve your capital. This means don't be reckless. Don't try to chase risky investments right now. Don't go all in just because you think prices are getting lower. Because guess what? prices can always go lower. Phase 2. Look for key signals. This is where we watch for the moment when the Fed and the government start to shift their policies, when they start talking about rate cuts and actually implementing them, when they start injecting liquidity back into the system, when they change their tone from fighting inflation to we need to save the economy. That's your green light. That's the moment to start positioning for what comes next. Phase 3, take advantage of the recovery. Because when liquidity comes back, when rates drop, when stimulus kicks in, that's when stocks, crypto, and real estate begin to skyrocket. And if you positioned yourself correctly, you're not just surviving the crash, you're profiting from it. But there's something else we need to talk about, because this time there's one major risk that could make this cycle completely different from anything that we've seen before. A risk that almost nobody on YouTube is talking about because, yes, the government might be following the same old playbook, but they might be playing a much more dangerous game than before. And if you don't understand what that means, you could get caught in the crossfire. So let's talk about that. Now, up until this point, everything that I've talked about follows a pattern that we've seen many times before. Markets crash, the government lets things get bad enough, and then they swoop in and with stimulus and rates go down and everything then goes back up. But this time, there's something different. Something that could change the way the entire cycle plays out. And if you don't see this coming, you could be making a massive mistake thinking that you're positioned for the recovery when in reality, you're setting yourself up to get completely wiped out. Because the government's plan this time, it might not just be about saving the economy. It might be about resetting the entire system. For decades, the US economy has run on cheap money. What does that mean? It means low interest rates. It means easy credit. It means businesses, governments, and regular people have been able to borrow money like crazy at a cheap monthly rate. And because of that, debt levels have exploded. The US government alone, right now, $34 trillion in debt. Corporate debt is over $12 trillion. Household debt is another $17 trillion. The entire system has been built on debt. And for years, no one cared because interest rates were basically free. But now everything has changed. Interest rates are getting higher again. Debt is crushing. And at some point, the government knows this entire thing, the entire system, becomes unsustainable. So what's their real plan? I mean, what's the end game here? It's not just about crashing the market to reset things. It's about resetting how the economy actually works. And if you don't believe me, just look at what's happening right now. You're seeing a massive shift in control. More government intervention, more regulation, more restrictions on capital flow, and behind the scenes, they're laying the groundwork. They're laying the foundation for an entirely new financial system. Now picture this. One day, you wake up and the money that you've used your entire life, it's no longer in your control because now everything has gone digital. And I don't mean like your bank account or credit cards or Apple Pay. I mean government-controlled digital currency. A system where every single transaction is currently being tracked, where your money isn't really yours, it's something that the government can monitor, it can restrict, and even take away. Sound crazy? It's already happening. China has it. Europe is working on it. And you might ask about the US? The Fed has been quietly developing their own version, a central bank digital currency. Now you might be watching this thinking, okay, but what does that have to do with this current market crash? Everything. Because a market crash, it creates the perfect excuse for the government to step in to fix things. Imagine this for a second. The market tanks, the economy falls apart, people get desperate, and then the government comes in and says, hey guys, we have a solution. Here's what we're gonna do. We're gonna stabilize the economy. We're gonna inject new money directly into your accounts. No need for banks, no delays, just instant relief for you. And most people, they'll accept it without question. They'll be excited because they'll be so focused on survival, they won't see what's actually happening. That the very system they're relying on to save them is the same system that will now control them. Now listen, I'm not here to tell you what to believe. I've been in the financial world long enough to know one thing. When governments make moves, They don't do it by accident or because they just quote unquote feel like it. And when markets crash, when economies break, and when things start falling apart, it almost always is followed by an even bigger power shift. The question is, are you currently paying attention? Because right now, most people are thinking about the wrong things. They're focused on short-term moves. They're trying to time the bottom of the market, but they're missing the bigger play. Because if everything we're talking about is really happening, then the real opportunity, it's not just about investing in the right assets, it's about positioning yourself for an entirely new financial reality. And that's exactly what we need to talk about next. So now you know what's really happening. You can start to see the bigger picture. This isn't just about a market crash, this is about control. A system-wide reset that could completely change the way that money works, how wealth is built, and who actually has power. So now the real question is, what do you do about it? Because most people, they're gonna wait. They're gonna hope things one day go back to normal. They're gonna sit in cash and panic and watch their money lose value, while the people who see what's coming, they'll position themselves before it happens. And that's what we need to talk about next. If you want to get ahead of what's coming, there are 3 key things that you need to focus on right now. And the first one, it's the most important move you can make in times like this. Because when economies shift, when governments change how money works, there's always one group of people who come out on top. The one who own real assets. Now, when I say real assets, what does that actually mean? I'm talking about things with real, tangible value. Things that don't just exist on a screen, things that can't be easily controlled, printed, or devalued overnight. Because think about it. If the government changes how money works, if they introduce a fully digital currency that tracks and controls every transaction, what do you think happens to the wealth of people who have all of their money in the system? It becomes vulnerable. But people who own real assets, they're protected to some extent. So what counts as real assets? It's things like gold, silver, land, real estate, commodities, and yes, it could even be cryptocurrencies. Because no matter what happens with the economy, no matter how much money is printed, these are assets that hold value over time. And historically, when there's a financial shift, real assets are what wealthy people rush into. So the first step, start thinking outside of the system. Start thinking about assets that actually store and protect your wealth, because that's exactly what the smartest investors are doing right now. Now, owning real assets is the first step, but it's not enough on its own, because the second move, it's about how you position yourself financially for what's coming next. Listen, there's a reason most people never build real wealth. It's not because they don't work hard. It's not because they're not smart. It's because they don't understand how the financial system actually works. They think money is about how much you earn. But the truth of the matter is, it's about how much you keep. In a world where inflation is high, where governments are printing literally trillions of dollars, where money is literally being devalued every single year, saving cash, the old tale to learn, that's not wealth building. That's wealth destruction. So what do? You need to position yourself where money works for you. And that means owning the right types of assets before the shift happens. Now, I know for a lot of people, this part can get confusing because you might be thinking, okay, I get it. I need to invest, but where? And listen, I get it. I remember when I first was starting out trying to figure all of this out. I made mistakes. I put money in places where I thought I was going to do the right thing and I was going to make a bunch of money, and I didn't, only to realize later I was playing the entirely wrong game. Because when you're investing, it's not just about what you buy, it's about why you buy it. You have to think long term, because if you don't, you'll always be chasing the next move instead of building real wealth. So what's actually working right now? Where should you be thinking about positioning your money? Unfortunately, there's not a one-size-fits-all answer, but I'll tell you this. The people who understand what's coming, they're focused on 3 key areas. The first is inflation-resistant assets, things like gold, silver, real estate, and businesses that thrive in economic downturns. The second is cash flow producing assets, investments that pay you whether the market goes up or down, or decentralized stores of value. Because if the financial system really shifts, you need wealth that exists outside of it. And that brings us to the final move you need to make. Because even if you own the right assets, even if you position your money correctly, there's still one last piece that determines whether you can come out ahead of this thing or get completely left behind and obliterated. And that's what we need to talk about next. Now, we've talked about owning real assets. We've talked about positioning your money. But even if you do both of these things right, there's still one last move that separates the people who thrive in times of change from the ones who get completely wiped out. And what's that move? It's your ability to adapt. Because what's coming next, it's not just about money. It's about power. It's about who controls wealth, who gets access to opportunity, and who gets left struggling to keep up. And if you're not paying attention, if you're not actively adjusting your strategy, then it really doesn't matter how much money you have, how many assets you own, or how smart you think you are, you will get left behind. Now, when I say you need to adapt, what does that actually mean? It means understanding how the game is changing before it happens. Because the truth is, most people don't realize how fast things can shift. They think major economic changes happen gradually, that they'll have plenty of time to react. But that's not how history works or what it's shown. Every major financial shift happens suddenly. One day, everything seems normal. The next day, boom, markets crash. Inflation skyrockets. Governments change the rules. And the people who weren't prepared, they're left scrambling, wondering what's going on, while the ones who saw it coming, they have already made their moves. So the question is, when that moment comes, will you be one of the people scrambling, or will you already have positioned yourself ahead of the curve? So how do you actually adapt before the next major shift? There are three key things that you need to be doing right now. Number one, you need to stay ahead of the information. The people who win in uncertain times aren't the ones who wait for the news to tell them what's happening. They're the ones already studying the trends. They're watching the global moves, and they're looking at the data to make their decisions early. So if you're not already actively learning about economics, markets, and financial systems, start right now. I want you to start looking at things like the unemployment rate. I want you to start looking at things like the CME FedWatch tool online. I want you to look at the retail sales numbers, the GDP numbers. I want you to focus on the actual data now. Not when MSNBC gives you that data, because at that point, it's too late. And no one is going to warn you before things change. By the time the news tells you what's happening, it's already too late. Number two, you need to increase your income. Because let's be honest for a second. A lot of people are trying to save their way to financial security. But in a world where inflation is eating away at your money every single year, saving alone is no longer enough like it used to be. You need to be earning more money. That means developing skills that are in demand. That means learning how to sell, learning how to negotiate, or how to build high-value connections. Because let me tell you, if you're relying on just one income stream as we speak watching this video, I believe you're playing a very dangerous game. You need leverage, you need cash flow, because when things shift, the people with multiple sources of income, they're the ones who stay ahead. And finally, the third and most important move, you need to start thinking differently about your wealth. Listen, most people have been trained to think about money in the wrong way. They've been taught that wealth is just about a big bank account, a nice house, and a high-paying job. But true wealth, it's not just about money. It's freedom. It's control over your time, your choices, and your future. And in a world where governments are changing how money works, where they're introducing digital currencies that track every transaction of yours, where they're printing trillions of dollars and pushing inflation higher, if you don't control how you earn, how you invest, and how you protect your own assets, then you don't have real wealth. You just have numbers in a system that somebody else controls. And that's not real wealth. That's dependence. So if you want to be on the right side of what's coming, you need to do 3 things. Stay ahead of the information, increase your income and create leverage, and think differently about wealth and control your financial future. Because here's the truth. The biggest wealth transfers in history happen during times of economic change. And the decisions that you make right now, they're going to determine whether or not you capitalize on it or whether you're completely left behind. That's your choice. So we're here. Ask yourself, are you going to wait and react, or are you going to position yourself now? Because the people who prepare themselves early, they don't just survive these shifts, they thrive. And if you're ready to start making real moves, now is the time, because what's coming next, it's going to change absolutely everything. And if you don't position yourself now, like we talked about, it'll be too late. Now, guys, if you enjoyed this video, please consider subscribing and turning on the notification bell for future projects of mine. My team has spent several weeks making this video a reality for all of you to watch and enjoy at no cost. And also, if you'd like to see more just like this, click the like button. We'll see you on the next video.